Canada reaches landmark EV tariff quota deal with China, what it means for North America. Beijing, January 16, 2026. Canadian Prime Minister Mark Carney announced a landmark tariff quota deal with China that will ease trade tensions and open Canada's market to tens of thousands of Chinese electric vehicles in exchange for lower Chinese tariffs on Canadian agricultural exports. EV tariff quota. Canada will allow up to 49,000 Chinese-made EVs into its market each year at a reduced tariff of roughly 6.1%, down sharply from a prior 100% tariff. Quota growth. That cap is expected to rise to approximately 70,000 vehicles annually over 5 years. Agriculture in return. China has agreed to reduce its tariffs on major Canadian exports, most notably canola seed tariffs from about 84% down to roughly 15%, and lift punitive levies on canola meal, seafood, and peas through the end of the year. Diplomatic context. The deal comes after months of escalating tariff disputes that previously saw Chinese duties on Canadian farm goods following Ottawa's protectionist EV tariffs. Trade strategy shift. The agreement marks a departure from Canada's previous alignment with U.S. policy on China trade, signaling Ottawa's interest in diversifying economic ties amid global tensions. EV market impacts. Chinese EVs entering Canada at lower tariffs could mean more affordable electric cars for Canadian buyers and potentially influence automotive supply chains in North America. This deal does not change U.S. tariff policy. The United States still maintains 100% tariffs on Chinese EV imports as part of broader efforts to protect American manufacturers. Broader trade effects. Canada hopes the deal will unlock nearly $3 billion in export business for its agricultural and seafood sectors, one of the country's biggest economic priorities. Carney called the agreement a preliminary but landmark deal, reflecting realistic, respectful, and interest-based engagement, and said it could pave the way for increased Chinese investment in Canada's auto sector. Implementation. Tariff reductions on EVs and farm imports are expected to start rolling out soon, with China's canola seed tariffs dropping by March 1, 2026. U.S. angle. U.S. policymakers will likely be watching how this deal affects regional EV competition and supply chains amid ongoing tariff tension with Beijing.